Welcome back to Bunnex Investment Group. In this particular video, I'm going to teach you a very powerful trading strategy that has approximately 88% win rate over a long period of time, of course, and it is called the shift candle strategy. So you are going to learn about one, what the shift candle is, and two, the price action position of that particular shift candle. You are not going to be looking for this shift candle anywhere on the charts, but you need to see first and verify its position for you to take action. Then entries, and of course you are going to learn about the market application, where we will actually go to the market examples. All right, so basically first is, what is the shift candle? That is the biggest question that you might have. A shift candle is a candle that has its high above the previous candle's high. In this case, we have two candlesticks, the green one and this red one. And within the green one, we can see this is the high of this candle, the low of this candle. And on the red one, we can see the high taking out this high of the previous candle. So we can actually say it has swept the high of the previous candle. And the closure of this candle is also important. We want that closure to be below this particular opening price. So take note of this, not below this low, but below. We want to at least be below this opening price. So this is a bearish shift candle, right? I actually chose this this particular example so that you can understand where we are coming from. The shift candle sweeps the high. You can see this is the high of this previous candle. It is swept right above, and then it closes below the closing price. So in this case, we have this as the closing price. It engulfed the body and then it closed here. So this is a bearish shift candle. Then this one is a bullish shift candle, where we can see that this is the low, the lowest price of this particular candle. It has been swept right here, and then this candle closes above this particular opening price in this particular instance. So a shift candle is basically a candlestick that sweeps the high or low of its previous candle, and then it closes below the high or above the opening, depending on the scenario that we might have. So here's the strategy description. How are we going to use this information so that we can get entries, or so that we can actually make money out of this knowledge? The strategy is called the shift candle play. So all that we are going to be looking for is the shift candle. It's now our duty to validate a shift candle on the rightful position of the price action. So it is utilized on the H4 time frame. I come across a lot of people who would ask in the comment section, what time frame are we using? Can I use this on M15? Can I use this on any time frame? I would say use the shift candle from the H4 daily, weekly, and going forward, because it is actually a strategy that allows you to have high quality setups, but they actually take time to appear. So step one is to see the H4 market structure. We all know that market structure is basically breaking of the highs and breaking of lows in a downtrend like this. And this can be simplified to be seen using indicators. So you might use indicators, or you might not like to use indicators. All that we want to do is to time these end of these pullbacks. So the pullbacks are what are necessary. When the market pullbacks, we expect it to come again to the upside. So when it comes down, we want to time the end of that particular pullback. And these pullbacks are where we will locate this shift candle at the end of the pullback. So it's impulse, then pullback, location of a shift candle, and enter the market. Is I will show you how you are going to be entering the market using the third candle. So 1350 EMA cross on the H4 time frame will actually give us bias. Where is the market going? When we see a 1350 crossing to the upside, we would expect to see the market to go to the upside. And when the market pulls back to the 50 EMA, that is where we want to look for the shift candle. So the 50 EMA, that is where we want to look for the shift candle. All right, so after the market touches the 50 EMA, we will start to look for the shift candle, basically like that. So you now need to understand this practically, and we now need to go to the examples. So after seeing all the steps that I've mentioned, we will set pending orders at 50% of the shift candle, as I will show you on the charts. Before we jump over to the charts, check out our free Telegram channel. I'll leave the link in the description box below. Be part of that channel because I share a lot of advice, a lot of educational content, as well as free signals. So let's jump right over the charts. Right, so this is odd against JPY, which is basically Australian dollar versus the Japanese yen. And what we are going to be looking for is basically the crossover of the EMAs, right? So here we can see that there was this particular crossover of the 50 and 13 EMA on the H4 time frame. We want to see this on these high time frames. We can see that what happened is the market actually came to this particular EMA, as I've mentioned earlier, and then it presented the shift candle. The market went to the downside to the 50 EMA, which signified end of this pullback, and then closure of candle was right above the closing price of this particular candlestick, and then it swept below the low. You can see here it swept below the low of the previous candle, and then our entry was going to be at 50% of the body of this shift candle. So this is where we were going to make our entry. So you understand very well that if you get an entry at on the H4 time frame like this one, you actually made a lot of money within this particular bar to the upside. Your stop loss should be below structure. Right, so let's have another example. You can see that here we had another crossover of the 1850 EMA here, and then we had an impulse to the downside breaking structure. We've said we want to time the end of pullbacks. The market gave us a pullback. What happened next? We can see it actually swept above this high of this candle, and then after sweeping that high of that particular candle, we can see its closure right below this opening price of this green candle, and then we can see the market pulling back, and then it went straight right into the profit. All that you need to look for is to at least enjoy one or two candles of the H4 time frame. And then here we had another retest, which is a point where we were going to look for the shift candle. And on that particular point, we can see this was not a criteria, not meeting our criteria, not meeting our criteria. And where did we see meeting our criteria? We can see that this one, we had this particular small star candle that was issued, and its high was right here. And this following candle, what did it do? It swept above, and then it closed below this closing price of this candle, meaning this was a shift candle. And the next candle, what happened? Although it actually raided to the upside, but we've said stop loss should be above, right above the high of the shift candle, and take profit at least 1.5 to 2R on the side of your direction. Then we can see here we had another crossover of the 1350 on H4, which I can actually mark like this. And after that crossover, we can see what happened is this is the low of this candle, the low of this candle, and this low was actually violated, or it was swept by this candle, and then that candle actually closed right above and validated the features of becoming it actually became a shift candle. So after that 50%, we entered the market and stop loss below the structure, or stop loss below the low of the shift candle. We actually saw these two candles being issued. It might have not reached our take profit that we would have anticipated, but it actually went into profit and probably closed at entry, since after 50% you need to close at entry. After 50% movement to your target, you need to move your stop loss to the to the entry point. Close crossover, but it's unfortunate this did not meet the criteria of a shift candle. Why? Because it swept the low, of course, yes, but this closure did not close right above here. It actually closed below, so it was not a valid point of entry. Here we did not have again, and here we had a beautiful point, which is this. We can see there was this low that was swept below, and then closure of candle above, right above, and 50%, and we are on like that right to this top. There were actually a lot of pips on that particular move. So basically, this is how you trade the shift candle. And whilst on that, join our free Telegram channel. I'll leave the link in the description box below, and you may as well continue learning about this stuff on in the top 1% traders course, which is right in the description box below. It's only $60 lifetime training, and you'll be receiving guidance all over. On that note, we've come to the end of this video. Thank you for watching. Like and subscribe, and I'll see you in the next one.